We've actually seen some deals announced this week. Biotech firm Amgen buying Horizon, PE firm BDT Capital Partners taking grill maker Weber private, and software maker Coupa bought by Thoma Bravo. That one's been speculated upon for a bit. But the flurry of deals may not herald a shift in appetite. For more on their outlook on mergers and acquisitions heading into the new year, we have Vito Sperduto, RBC Capital Markets co-head of Global Mergers and Acquisitions. And whew, it has been quite a year, hasn't it, Vito? So are things shifting at all? I mean, that's just anecdotal, right, that we've had a couple deals this week, but still.
No, and I think when we'll talk about it, I think these transactions highlight some of the trends we're seeing and some of what we're looking forward to in the coming year. I mean, it's certainly been a tale of two halves if you look at the first 2 quarters of the year versus the second half of the year. I mean, keep in mind, the volumes we've seen the last 2 quarters on a quarterly basis is lower than we typically see, and you'd have to go back well before the pandemic to see these types of volumes. So we're going to end up the year at about probably 1.6 trillion in the U.S., which is well down from last year, off about 43%. But if you put it in perspective, it's only off about 10% where the pre-pandemic levels were. And you saw in 21, when the market just was exceeding expectation, it was primarily driven by the fact that there was so much pent-up demand. And you had, when the market reopened, you had everybody accessing the market. So if I look into 23 right now, certainly the first quarter is going to be challenged. I think all of us are looking forward to the news later today and try to see the tone that's going to be put out there by the Fed. But until there's some stabilization there, it's going to be difficult to get a regular trend going. I do think the second half of next year is going to be extremely strong, primarily because we're going to see a lot of deals that people are planning to bring out. And so if I look at our own pipeline right now, there is a significant amount of volume that's expected in the second half of next year. But, you know, as we look at our team is working as hard as they ever have because there's many clients preparing to hit the window when it opens. And so if I look at next year, I certainly think it'll be at least in line what we saw on average pre-pandemic and likely higher because you're going to see some deals that didn't happen now flow into next year.
I think a lot of folks are waiting for a series of big deals in the tech space, notably in software. Some of these valuations have been absolutely hammered this year. Is that one sector that investors should look to that will see a big pickup next year?
Tech is always leading the way from a M&A volume perspective. If you look at the LBOs that have happened this year, I think like a little over 35% of them have been software and tech focused. I think the deal that you just mentioned earlier in terms of Thoma buying Coupa is a great highlight of what you see in the marketplace. Certainly a darling early in the pandemic and was trading at levels well above where it is now. At the start of the year, it was almost double what the deal price is today, and it had gotten beaten down during the year. And you see someone like Thoma, who just raised and closed on 3 funds totaling over $32 billion in new, fresh capital, executing on a significant transactions. Now, if you dig in, though, part of what you're seeing is that they're finding different ways to get the deal done. So versus the traditional bank financing you'd see for the debt, they went to direct lenders. So 19 parties provided $2.6 billion worth of capital. That's pretty significant. They did $3 billion through direct lending when they bought Anaplan earlier in the year. And so that marketplace has taken prominence while the traditional financing sources aren't really available with the volatile environment. Now, I do expect it to go back. I mean, if you look back at the start of the pandemic, you saw the private equity firms doing a lot of pipes in the public companies, and they were doing alternative deals. As soon as the market came back and they could do traditional LBOs, they went right back to that. Right. And so there's too much capital to spend not to go back to that market once it reopens, which I think second half of the year of next year feels like it's going to be a good time period.
Less of an easy money environment. Deals for some of the acquisitions that publicly traded companies are making, they're going to be scrutinized more because the investors are going to be looking across how much of that money is going out the door and what growth or what accretiveness some of those deals carry as well. And so what role will the financing of these deals also play in 2023?
Yeah, I think if you're, Brad, if you're referring to sort of what public companies are doing, I think if you look at someone like an Amgen and Horizon, it highlights the fact that you have a party with significant amount of capital on their balance sheet. I think they have over $11 billion of cash on their balance sheet. Now, obviously, some of that sits in foreign jurisdictions and it's hard to access, but they're also an investment grade borrower. And they're also a leader in their sector. And so parties are going to look at that. And those are the parties that are going to do well now in a volatile environment. They're able to do deals. We often track cash on balance sheets, and we look at the S&P 500 as an indicator. Pretty interesting. If you go back to the 08-09 credit crisis, the S&P 500 had about $1 trillion of cash on their balance sheets. It peaked at about 2.1 trillion at the end of 21. Right now it's at 1.9. So it's almost double the amount it was before. And I think CEOs have tended to be more conservative. They've wanted to be more liquid. They don't want to get caught again like they did in 08-09. And if you look at the sectors where have the largest cash piles, tech and healthcare. If you look at the sectors that are the most active from an M&A perspective, tech and healthcare. And so it just works in that fashion. And I think we're going to see a fair bit more from a technology consolidation perspective, but then also biotech is a hot sector. I mean, Amgen's buying access to a certain number of products that they covet.
Yeah. Vito Sperduto, RBC Capital Markets, co-head of global mergers and acquisitions. A lot to track going into next year. Thanks for teeing this up for us. We got a lot to keep our eye on. Thanks.
Thank you for having me.